Hey guys, welcome back to the channel. In today's video, I'm going to be providing a long-term market analysis for Solana. We'll talk about this key retest of the $25 to $24 range. That was the support in the summer of 2021. We also saw that as the floor just before the FTX crash. So this is a pretty key level given the historical context. We'll talk about some regions of support if we do have some sort of correction back down, the bullish break above the 20-week moving average, as well as the Solana BTC ratio, which is coming up right into a level of resistance at this zone around 11,000 Satoshis, and also these weekly moving averages. So if you guys enjoy the content, make sure to leave a like and subscribe. Also, by the way, I will leave a link to my Twitter page in the description below. Feel free to go ahead and check that out as well. I'm fairly active over there with crypto content. So again, we are seeing that retest of this zone ranging from $24 to $25 over the last few weeks, which has historically been a major zone of support and resistance. Again, going back here to 2021, that was the triple bottom that we held as support in these summer ranges. And then we also had that as the floor just up until November of 2022, where we did see that big breakdown following the FTX crash. So if we do have a breakout back above this level, that will be the big signal on the longer term chart that we have confirmed this bear market trend. That will be the level that if we can reclaim, then I would really start to target some of these lower highs, like the one in August at $48, like the one all the way back here in March at $142, and then ultimately the all-time highs. And the reason is because when we have a reclaim of this level, that will just basically erase this entire FTX crash. That will erase all of this negative price action, and it will come off the back of, again, reclaiming a huge zone of support and resistance. It has come off the back of a reclaim of the 20-week moving average. It will put us up to multi-month highs, and all of these are just signs that you do not see within a bear market. You do not see a break above a 20-week average or a multi-month high being formed during a typical bear market, because usually the lower highs get rejected before that would happen. If we were still in a bear market, I would assume we would have rejected at the 20-week average like we saw back on each of these lower highs. And you can see what I mean here with the move again in March. Coming up to this level, the blue line on the chart, the 20-week average, acted as resistance. We saw that as a rejection point, also rejecting off this level of previous support. And then we had the same thing play out right here in October on this lower high. Coming up into the 20-week average, rolling over, forming lower lows, and just continuing that bear trend. So the fact that we've actually broken back above the 20-week average really does give us some confidence that this longer-term bear market has reversed. But again, breaking back above the $25, $24 range is just going to confirm that even more. That's going to give us a little bit more confidence that, again, we do have a bear market reversal. And at that point, I would really expect the momentum and the traction to start to gain back to the upside. So on the Solana Bitcoin ratio, this is actually coming up right into a major zone of resistance, retesting both the 11,500 Satoshi level and these two weekly moving averages. So the 11,500 Satoshi level we saw was support from back here in June of 2022. That was the summer low where we had a reversal and a pivot off of. And we also saw that as the previous resistance from back here in May and June of 2021. That was the range high where we had two rejections off of. And then the breakout above this level really gave us the signal that we were having a huge blow off top to the all-time highs right around 47,000 Satoshis. So in general, this is a very key level to be watching out for. We're starting to see the initial signs of rejection. We have about 3 weekly candles coming off right here from that retest, also retesting the 2 weekly moving averages, the 20 SMA and the 21 EMA. So we have a band of resistance at this zone, and that could be where we start to have a major high to be formed, and then we could have, say, potentially a retest of some of these lower valuations before ultimately moving forward into, say, the next few months. And again, this is a logical level to expect some sort of local high because we do have very strong resistance at these two levels. So if we were to have a deeper and extended pullback in the next few weeks, we could potentially expect some sort of higher low to be formed off this support, which was the same level of support in the range lows that we had in this summer 2021 timeframe. Again, coming back down to have this triple bottom more or less off of that level. So this is a reasonable area to expect some support to be held if we do have a deeper and extended pullback. But of course, we could just have a reversal right here. It all just depends on when we are eventually breaking back above these resistance levels. And either if we do have a higher low formed first, or if we do have a pattern where we're just starting to consolidate here and eventually just slowly grind above that level. Either way, this would be a huge bullish sign because it would, again, reverse that longer term momentum. We could pick out some sort of higher low in this range. either way, it would be a bullish sign. And I do think that we could see that in the next few months just because we do have some very bullish signs on this Solana USD pair. I do think that the altcoins are going to start to outperform Bitcoin because we're at that stage of the market cycle where people are starting to go further out that risk curve. Once again, having a risk appetite, and Solana is one of the altcoins that I do think will outperform eventually. We just have to wait for it to break back above some of these resistance levels, again, like the 20 and 21 weekly moving averages, and then this level at the June 2022 lows. So I hope you guys did enjoy the content and the analysis. By the way, make sure to check out my Twitter page. I'll leave a link to that in the description below. As always, I hope you guys enjoyed it, and I'll see you in the next one.